If you'd like to see more of our videos, hit the subscribe button to stay on top of the market news. Good morning, traders. Welcome to today's market review. This is Fred Razak at CMtrading. Today is June 22nd, 2020, and today is Monday morning. So looking at the highlights of the day, well, this time it's gold. It's breaking out of the range. And now this has some ripple effects. We're going to take a look at that in just a second. But first, let's look at the events of the day. So there's no major economic events scheduled for today, but as we look at the various markets, firstly, starting out with the currencies, we're watching the dollar actually gain modestly versus the other major pairs. Now, this correctional move is happening on the back of the fact that the Dow Jones is also pairing its gains, which means that the Dow Jones goes down, the dollar goes up, and also commodities go up as well. So looking at the gold, it's breaking from that upper range of 1741 where we've been challenged over the past 3 months, not breaking above that 1741 and finally taking it out with some gusto. Okay, a nice breakout and a gap and go. So really nice little move there. We're going to take a look at that in just a second. And lastly, looking at the stocks. Now, the stocks are taking a bit of a rotation. Last week, it was Amazon that was pushing the market higher. But Apple made an announcement last week that can change the direction of the markets. Apple mentioned that it's closing about 13 of its stores, which means that it's contracting from its current situation. So that may actually change the market direction because Apple is really a big bellwether. But let's take a look at the markets and see what we can expect from today's trading. So we're going to first start out with a daily chart of the Euro USD. We saw this actually retrace and hit this resistance-ish area last week, and finally receding down to the 112-ish area. Now, we're right in between these two thresholds, okay? The upper limit being at 113, lower limit about 110-ish level, and we're right smack in the middle of that, okay? So nothing really jumping out and saying, okay, this is a clear buy or clear sell. But I want to highlight the fact that if we compare this to the GBP, we see that the GBP is actually weaker vis-a-vis the USD. If we look at that right now, we see that actually retrace further than its midpoint. Okay, vis-a-vis the USD, we're trading at 123.90-ish level. So if this doesn't get above this 124.70-ish level, I'm more than likely that we're going to recede down to this 121-ish level. Now, this is also going on the back of the fact that the Dow Jones is receding. Okay, that's what I mentioned earlier, is that the dollar gains when the Dow Jones actually sells off. Now, looking at the commodities, we're going to take a look at gold here, trading at 1752 above that 1741. You see that nice little breakout. Okay, so this is a little bit of a gap and go. I would expect the 1741 to be used as a potential support level. Okay, as we hit this 1757, and this is a nice little breakout as we hit a little bit of a wedge formation last week. We did mention that. Okay, and looking at it now, I'd like to see it maintain this area, 1745, and maintain not breaking below it in order for it to get out higher. Now, like I said, this is really on the back of the fact that the Dow Jones has receded. In the past 2 weeks, it sold off over 2,000 points. Okay, but before we get to the Dow, let's look at oil for a second. Oil hitting this upper limit of $39, not breaking to that $40 range. Okay, so just be aware of that. All right, so this may follow gold, but at this area that it's not breaking it out, it's more likely that it will retrace. It won't retrace back to $30 a barrel, but it'll probably retrace between 39-ish, upper 39-ish level down to 38-ish level. Okay, that's where I do expect it to trade throughout the week. Now, looking at the Dow Jones, this is really something very important because we saw this actually retrace over the last couple of weeks, not even less, from 27,000, okay, all the way down to 25,300-ish level. Sorry. Okay, let's look at a 4-hour chart because we're looking at a shorter time range. When we hit a high of 26,300-ish level, that was your area, and then finally breaking it down to 25,300-ish level. Now, we're having a little bit of a bounce here, but there was some negative sentiment towards the end of last week's trading that may continue this push downwards. Okay, so something to consider as we go into today's session. Now, looking at the stocks, we see a different story because some of them are really strong. If we jump into Amazon, first looking at Amazon, hit a high of 26,900-ish level. Okay, so we're right there, almost close to our all-time highs. If we look at Apple, okay, kind of receded from that 355-ish level, okay, after hitting last week's high. Now looking at some of the other stock, Microsoft, a little bit less than where it was originally at 195, less that 198-ish level, okay. We haven't continued to break that out. So the stocks are still relatively strong, but the question is how much longer, okay? When is everybody going to wake up and understand that we're still in the middle of a pandemic is yet to be seen, okay? We may get into that this week, next week, but this will come, okay? When Warren Buffett makes an announcement last week that, the stock market is at la-la land, okay, that's reason to raise your eyebrows and say, hey, maybe we should take some money off the table. And I do expect that second wave to actually happen where we do have another major sell-off. Okay, the pandemic is hitting a second wave in certain countries and is growing in certain states in the United States. So this thing hasn't gone away, and it's a matter of time until the markets actually catch up to it. So something to consider as we go into this week's trading session. This is Fred Razak. I want to wish you guys a great trading day. Thank you.